Good morning, everyone. Charts are up. Let's do this. I usually don't start with Bitcoin because, while it's an influence on the market and what it was yesterday, right? I'll explain in a sec. But first thing I wanted to mention was this is the kind of thing that takes people out of the game of trading because when you learn something, like everything that we learn creates beliefs about the future, right? No matter what your profession is. So when you learn patterns and you see ones that have been so consistent in producing results, money, you get, a strong opinion about that. That said, we don't ever do anything without a stop loss. So one of the things we talked about over the last week or so was this Bitcoin. Well, actually, over the last month or two, how it was going sideways here. We talked about the fact that there was a huge void below, if it would break support, and the volatility and holding this base and so on and so forth. Right. So then it was this igniting bar and the bottoming tail bar, which was like a correction bar that usually results in a move higher. And then here was the move. And yesterday, devastation, right? Some news. Dan was typing to me, whatever it was. I didn't know yesterday, but it crashes down through all of the support, and now it's got a void below, which you can see on the monthly time frame. I don't know if it'll get all the way down there, but at this point, unless it has a miracle reversal, the door is open. The door is open to going down there because you see the momentum move that occurred here. So yesterday, where the markets, moved up into the void that we spoke about, right? Yesterday, pre-market, and we talked about, as we always do, let me just flip this back here. This consolidation, and if it could get above it, here was the move down on the Fed day, and that would open up the door into the void above and the potential for prices to go up. And they did. And, not, it looks big on this time frame, and on the daily time frame, I explained I don't like this pattern, as far as longs go, because of the break here, and this retracement often results in a turn lower. But one of the keys yesterday, there were a couple of them, right? So in the green room, I was like, what's going on here? Bitcoin is starting to crash, and the market is just like, yawning, like in a sense, ignoring it, doing nothing. And then, I pointed out that, hey, the bullishness of this market, like over here, the dollar is going down and interest rates were coming down the 10-year. And I was like, hey, this thing's retesting the low here and Bitcoin's dropping. If this thing creates this little W and pops up, the markets are likely to come in. And, we know they did aggressively, and, once they kind of got climactic, in the latter part of the day, then they, reverse back up again. And that's what this market's been doing, just, going to smaller time frame extremes, creating voids and mini climactics, and then going back in the other direction. And that's all aligned with, what we talked about over the last day or two of, the indecision and election stuff. And here's another part of having beliefs and opinions that, as strong as they may be, they don't necessarily come to fruition. It was like, what happened to the red wave? The Tsunami was kind of like, hey, it was a wave. Sometimes here in South Florida, we get waves, but, don't go out there with a surfboard for those waves. You know what I'm saying? It was like a little it was a ripple, yeah, right? It was a ripple wave versus a tsunami. And so we have to be so cautious as traders as to a balance, I would say. Cautious is not a good word. There has to be that intelligent approach to calculated risk, which comes down to money management, which is the most important thing to survival and making money. And you're new to trading, the survival part is the first goal, right? Learn something and then survive the learning curve. So, it's going to be a red wave. They're going to take over this and that. And maybe we'll see what happens. It looks like the House, maybe the Senate, but it's not what was hoped for. Anyway, the Bitcoin, thing with the pattern. So it's kind of like my little lesson of the day of no matter how convinced we are with the beliefs that are created by our past method, that there were times, like I can say, to double down on a position, but if you don't have the management correct with an open mind, you're just opening up yourself to destruction. So anyway, let's see where things are at now, which unfortunately they haven't changed very much. So now the focus is tomorrow, CPI, and so on and so forth. And in my beliefs, that isn't going to change very much one way or another. We've got this indecision, and maybe that will trigger things. But we go back to our into-market analysis of what are the markets telling us, and yields here, they don't know yet. They're waiting, still waiting. This is still going up, so it tells us the Fed is going to raise interest rates. Maybe it'll be half. Maybe it'll be, Now we hear Meta, Facebook is laying off 11,000 people. So many jobs are being lost at this time. I think there's going to be this contraction. So, with that happening, and the Fed needs to, be the doubting Thomas and put their finger in the wound, so to speak, and see the slowdown and all of that. But we know it's coming. So maybe a quarter, whatever they're going to do, right? So the anticipation of not being as aggressive, but we see the 13-week gapping up here, and it's holding its own. So the message here is not that they're going to do nothing, right? But maybe it slows down. And the 10-year ahead of a shoulder. Well, I don't know. It's in an uptrend. It's making higher highs. The way we would read this, Robert, based on how we look at things, and we've talked about this before, is slowing momentum. So slowing momentum does not mean a trend change. It just means slowing momentum within an uptrend. And so when you have pivot lows and pivot highs getting closer together, that produces a trading range. But the distance between highs tells us upward momentum is slowing. See, there's no pivots here. There's a pivot here, right? It moved up and then it went far there. So we respect the uptrend. And as a pivot low forms, there's going to be buyers. And it's like, okay, momentum slowing. Can it do this? Well, it didn't. There was bullish price action. And then it went higher. And the momentum increased again. So slowing momentum isn't a reason to short. It's only your job is for you to recognize that. And so here, momentum is slowing again. There's no pivot here, but the distance between the highs is getting closer together. The 20 MA is catching up. So the same scenario. We don't have any pivots here, but when you see a bottoming tail bar, you don't have three to the left, but you got two. So in an hourly time frame, that's a pivot. And so we know that that is an area of support. And well, look, rounding, Robert, is a picture of slowing momentum. So this is an explosion. And then this is a trend. And then the bars are smalling. But until we have a trend change, if you look at this and say, well, here's a red bar. I'm going to short that because momentum is slowing. You might get lucky. You may get the top, but you may get run over again. So, but we are probability traders and investors. So what we want to see in a scenario like this is it cracks. And then when it cracks, we've got this big supply area overhead. So this could pick up in momentum, or it could just advance slower. So we have to look at it objectively and keep our own opinions, somewhere in the background as to what's going on. And this, so as we look across different situations and now potentially a lower high, what is this doing here? I don't know. So stay the hell away from it, right? Don't trade it. Well, you may not want to trade this, but if you were trading, bonds, and you see a scenario like this with overlapping bars and it makes a peak and you say, well, maybe it's topped out. Well, maybe the trend is still up. It's made a lower high. It's made a higher low. And this is where, traders revert back to the old times of connecting dots in their coloring book. I love that analogy in that book, Winner Takes All. I think his name was Gallagher. And he was a fundamental guy trading commodities. And I read that book many, many years ago. And he said, guys that look at charts, they're just like children that haven't stopped connecting the dots in that coloring book their mother gave them that used to make cool pictures. And I was like, damn, that guy's like rubbing my face. And I was like, it really opened up my eyes to lots of stuff, to like connecting dots are really stupid, but you can read a contraction in momentum if that is a visual aid for you, but I can just read that the pivot highs and pivot lows are coming together. So momentum is slowing. It's not that this is support. That is a ridiculous concept, or that is resistance. And that's why so many get misled in this world of learning about technical analysis. It's about looking to the left and what was created by money. So, and that's what we do. We look at charts and simple but not easy, as they say. Okay, so SPY here. What are we doing? Pretty much nothing. Nothing decisive. I guess, well, everybody's waiting to see if something decisive comes. Looks like they got the House and maybe the Senate, but the world waits, and of course for Thursday. So we got nothing going on here. Probably more of the same, ups and downs. The Dow, showed that relative strength and got above the high. Where is it now? There's my cursor, gapping down a little bit. So this could be an M top with a bonus, as we call it. What does that mean? Somebody will say, well, that means that a pattern like this with it was a very shallow retracement. It takes out the high, and then you get the reversal down. So the bonus is making the new high, and then you get traders caught. We'll see. We don't know until we know. And let me just see here. I didn't even look at SPX yet. I'm trying to catch up from yesterday and all. But I see the markets aren't doing anything. So we're just looking at the charts. We want to be above that swing high from November 1st. Over 3,900, absolutely. So where's SPX? Oh, come on, Gregory. SPX. So here's 3,900, right? These closes up here. Yeah. But just, 3,900, was helping me out here, and I appreciate that. I don't know what all that is. Data window. All right. So there's the high, 39.11. And so now we say, is that far enough away? One of the things we look at is just the size of these bars on average without doing an average true range indicator and say, oh, that's a big bar. That's a big bar. That's a big bar. How big are those bars? It's like, how far would it have to travel from here to go up there to be a big bar like that? It could happen. And then, so it's a whole number. You got a pivot up there, and 3,900. What time is it? 9:17. And my thing is not filling in. Like the quotes are gone already at 9:17. And I didn't look at it earlier. So I don't know if there's juice up there. But you want to be above 3,900. You know, it always, you know, which way the markets go. So personally, I like to fade an extreme. So yesterday, for those in the room, right, when the markets were rallying, I told them, you know, I guess it was right around here, right? It was right around 11:30. I said that is the spot to do it, but the time decay had eaten up. So there's that balance of time decay versus price. So when you get these moves, and I said, okay, you know, that's it for, you know, my opinion, that's it for the market. It's going to stall. And, you know, it did, but, you know, then the premiums were kind of eaten up. But anyway, so, you know, looking for, you know, moves to occur and fading them, and then see if the premium is far enough away, we can get, you know, a little further away. So as I told the room yesterday, the idea is to, not that we want to get more premium at the same numbers. We're happy with the same premium further away because of the rally. Yeah. Well, when I said it then, it was right at the top. Then there was the retest. Right? So what I was reading was the fact that it had gotten climactic, or let's call it semi-climactic, you know, tick extreme, so on, you know, the things that we look at every day. I'm going to say 39.10. That should be fine. So the news events today, we're not going to get CPI till tomorrow. But I don't think they're saying this election stuff could be Friday. So maybe that's not a concern where that could move the markets, that somebody comes out, oh, such and such one, and, you know, whatever. 37.15. I think that's a no-brainer. I mean, the markets could go down, but I don't think anybody's going to drop that. Yeah. So 39.10, 37.15. I'm good with that. All right, let me move along here because I talked a little bit too long, and this is, you know, was the prior low. It bounced up, it hit the 20, it's sitting there. It's kind of like one of those scenarios that could flip in either direction. You know, there's a void above, you know, there's some support here. Looks like chop coming to me. And, you know, the Dow we looked at was stronger. And, you know, silver. And it's just, you know, what's happening here, even intraday, right? There were things yesterday that looked like they could go lower. They hit some support, they rip higher. And, you know, they did rip higher, and then, you know, all the way back down. So there are intraday trends that last, which seems like a long time, but they can fall apart. So it's a time to be nimble. So, you know, this is dependent on the dollar, so we'll have to keep an eye on the dollar, and what we do every day. Crude oil coming in a little bit, lots of indecision. So all yours, Dan.
Well, Greg, tell them about today's MT Live.
Thank you, Dan. And I usually post that in the, you know, to go to Facebook and Twitter and all that. Yeah, so MT Live is going to be different. We've never done an MT Live to the extent of what we're going to cover today on techno fundamentals. So it'll be different. You'll love it. I'll warn you, you may get a little brain damage to absorb some of what I'll say, but it'll be fantastic. So.
And it's so timely because that's what's been such a theme all year long with the intermarket analysis and yields and interest rates and all that. All right, so I totally went into defensive mode yesterday. We had a multi-bar rally. CPI. So we are flat in the options trader. We did one condor on this is all. We did the FAR 115s and the 90s. So now the pressure is going to be on the put side here. We're still out of the money by $1. We sold it for 87 cents. And I'm hoping it'll be a small profit. So I'll be stalking that at the open. The other opens, if you have any questions, ask, but we don't have much. And they all look fine. Meta here gapping up. So this is I like as a put spread idea. See if we can do a little bit of backing and filling to get a better price. TTD, there's a number of these stocks that are extended and bouncing up in a downtrend. And so again, with CPI, I'm going to be very cautious on swings. They could be day trades and or Friday put spreads is all. Akamai earnings. Now see, yesterday, that is a continuation bar. Went up, took out 3 highs into the gap, range expansion, topping tail, and a price void with a sell setup on the weekly. So it's earning, so I'm not going to run into it, but a small gap down. And I typed 30-minute low. This looks like a great short for swing or day trade. So that's what I call tier 1. I like that a lot. Let's see. Fernando gave me a couple here. Dow had a gap breakout, but extended bottoming pattern, market iffy, so no interest as of now. O is a little better, just because it's not as extended and it's holding the upper 50% of this bar. Just keep it on the list. I'm not rushing into anything, but it's worthy of watching. This one up 3 bars, topping tail, needs more backing and filling. This is a sell setup. I don't know why am I looking at this? Did one of you give this to me? But yeah, that's a sell setup. So yeah, I like that as a short. Yesterday's low. ABI. Gap breakup, bottoming pattern, put spread idea. ANET, gapping down 124. That's possibly a condor, McFly, not McFly, McGraw, sorry. Newer, opening flat, buy setup on major support. So that looks interesting. I'm going to get rid of Meta here because I have it on the other computer. Alarm, I don't see the gap. This Jack Henry. I think there's only one print here, but if it is gapping down another $10, it could possibly be one of these where short-term excessive gap down. $15, this thing getting slammed. There's so many bearish weekly, monthly charts. Look at this, was $400 in COVID. Would any of you in your wildest dreams have thought a year and a half, 2 years later, whatever it is, year and a half, that this would be under 19, well, would be $15? That is just mind-boggling weakness. AXON gapping up $12. That's very, very bullish run here. But you've run from $1.25, and now you're gapping up to 162. My bias is short, it's not long. But all that means is let's put it in a window and see what it does. Plug, potential start of a bottoming pattern, but you know, when I say start, it could take a week or two. But you know, negated the gap down, moving up a little bit. This is a gap breakout from an inverse head and shoulders here. But the problem is you don't have a price void. But that would be a put spread candidate. 30-60 gap breakout. Trade sloppy, but another no-brainer put spread. I'm gonna put that in the window. SFM, that's a grocery store. Carg is just getting killed here too. Look, that's a bearish consolidation and a downtrend. It was a potential bottoming pattern, but no something. And now that's just getting killed. Poor AMC has been getting killed for a while. Looks horrible. I know we talked about AY. I don't see any prints. C's, I don't see any prints. But if it is gapping down, then that is a call spread candidate. Hill HGV, I think, is Hilton. That's Hyatt, right, Alex? This is Hyatt Vacations. I see one print at 39. We'll come back to you. All right, Coher. You know what, folks? I don't know if you all remember this yesterday when we were looking at earnings. I specifically said this looks horrible, but this tight consolidation after being down from 55 bucks, I said the risk is if this gaps up to 35 bucks, then you got a pro gap with a big price void. So that looks great as a long that can hold. You know, the problem is it's up $5 from yesterday's close, but that's a shock. That's a shock gap with a price void. I like that. Starwood, another hotel, no pattern though. Mid, can't see any gap. Here's a gap breakout, 55, but the gap's too big. So on a pullback, I like this. Another no-brainer put spread, this recent IPO. I was trying to sell 17.5 puts. They were too spready. I didn't get filled. RCI. Looks like it's not even open yet, but this is bullish with a void 44.45. So if somebody wants to watch it for me. TTD, this was a gap and a downtrend. Bottom right, I see newer moving. This is a no-brainer put spread, maybe 5-10 minute high. Okay, so our Disney, we're at a profit. Closed put spread 50 cents. All right, so see, here's another example. Greg, you like watching these too. Look at that massive gap against us on the Condor on Disney, but we're up 37 cents.
It can't be, Dan. It just doesn't pass the common sense test that something goes against you and you make money.
I know, that's why we love trading. All right, newer, they're ridiculous spreads, but nice pattern for a day trade. I don't chase, but someone keep an eye on that. Maybe a 1, 2, 3, maybe 30 minute high, whatever. Greg, Zoom low alarm you mentioned yesterday. There you go. It's shorter right here. Or should we wait 5 minutes, Greg, or you like it right here?
As a swing, it's triggering, so just stop above yesterday's high. Intraday, that's, you know, anyone does their own.
Swing. Yeah, that looks fantastic. Small little bear flag there with another little, you know, continuation failure bar. Amazon, yeah, it is. Yeah, it couldn't bounce.